Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. So, in today's video, we're going to be talking about the Tasuki Gap candlestick pattern, which is a powerful continuation pattern that can help you identify strong market momentum and potential trade setups. So, this pattern is often overlooked, but when used correctly, it can provide you with a significant edge in your trading strategy. So stay with me until the end of this video to learn how to spot this pattern and apply it effectively in your trades. So without wasting your time, let's get started. So first, let's look at the pattern overview. The Tasuki Gap candlestick pattern is a continuation pattern that signals the market's intention to maintain its current trend. It forms when there is a gap in price followed by a retracement candle that partially fills the gap, but the overall trend remains intact. This pattern can occur in both bullish and bearish markets, making it versatile for different trading scenarios. So this is for the bearish and this is for the bullish. This is the bearish pattern right here and this is the bullish pattern. So we're going to explain all of that shortly. So the structure of this Tasuki Gap, let's look at the structure of this Tasuki Gap candlestick pattern. So the first candlestick shows strong momentum in the direction of the existing trend, either bullish or bearish. In this bearish example, let's use the bearish example to explain. You can see the first candlestick shows strong momentum in the direction of the existing trend, which is bearish in this case. And then the next characteristics is the gap. A noticeable price gap forms in the same direction as the trend, emphasizing market strength. This gap can be seen between the first candle and the second candle. The second candle opens with this gap below the first candle. In this case, this is a bearish example. So the next characteristics is the retracement candle, and this is the third candle. This third candle right here. Now the third candlesticks move against the trend slightly, filling part of the gap but failing to close it completely. So this is the gap between the close of this candle and the opening of this candle right here. So the third candle is expected to just come and fill up this gap just a little bit. It shouldn't fill it up completely. It should just fill it up partially, just a little bit, and close. And the next candle or the next couple of candles should confirm the trade. We're going to talk about that later in this video, so stay tuned. And that is for the bearish example. For the bullish example, it's quite the same. Have the strong first candle, bullish first candle, then you have the gap between the closing price and opening price of the first and second candle respectively. And the third candle is expected to fill up this gap partially and not completely. You shouldn't fill it up completely, just partially. And then the next couple of candles or the next candle should confirm the trend and to check if we are still bullish or bearish. So when these three elements align, they create a clear signal that the market is likely to continue in its trend direction or current trend direction. So types of Tasuki gaps we have the upside Tasuki gap, and this forms during an uptrend and signals bullish continuation. And the next we have the downside Tasuki gap. This is the upside Tasuki gap and this is the downside Tasuki gap. So the downside Tasuki gap forms during a downtrend and signals bearish continuation. So why does this candlestick work? What is the psychology behind it? The psychology behind this pattern is rooted in market momentum. The gap represents strong buying or selling pressure, while the retracement reflects temporary profit taking, and the inability of the retracement candle to close the gap fully confirms that market participants are still committed to driving prices further in the direction of the trend. So that is the psychology behind this entire pattern, the Tasuki Gap pattern. So let's hop on the charts and look for this continuation pattern. We have the bullish example here. We have the upside Tasuki Gap pattern right here. So remember, you should see the first candle, which is this green candle right here, and it should have a gap. The second characteristics is the gap between the first and the second candle. And the third characteristics is the third candle, or the retracement candle, filling in the gap partially and not completely. And you have this third candle filling in the gap partially, and the next candle, the next couple of candles, confirms the trend. We are going to talk about the entry strategy you should use in a couple of seconds or minutes, so stay tuned. So this is for the upside Tasuki Gap pattern, and let's look for the bearish Tasuki Gap pattern. And this is for the bearish Tasuki Gap pattern. We have the first candle, which is this bearish candle, and we have the second candle forming the gap between the first and the second. I have the retracement candle, which is that bullish candle you can see, and it closes it partially. It closes the gap partially but not completely. So after this, you can expect price to push lower after this rejection, the retracement candle partially filling the gap. This shows that buyers couldn't completely take out this gap, showing that the selling pressure is still on in the market, and we should be looking for further downward prices. So this is the example of the upside Tasuki Gap and the downside Tasuki Gap. Let's look at the trading strategy you can use to trade this candlestick pattern. So first is to look at the overall context. You should be bullish. The first step in any strategy is to look at the overall market context or price action. So you should be bullish, and should look for significant key levels. In this case, you have this price breaking structure to the upside here, had this retracement, minor retracement, and we have price continuing to the upside. And it's expected for price to retrace, and retracing right here, we have this resistance turned support, and price retrace right into it, and we are expecting price to continue to the upside and break this structure. So this is the market context at the moment when we had this upside Tasuki Gap candlestick pattern. So seeing that we have retraced back into this resistance turned support, we should be looking for buying opportunities. And you can see that the upside Tasuki Gap candlestick pattern gave us a very good confirmation to enter a buy trade from here. We have price retracing and failing to completely fill this gap, and we have the next couple of candles closing above this. Now this is for your confirmation. The next couple of candles after your upside Tasuki Gap or should close above the pattern, and you have the fifth candle actually closing above the pattern, and at its close you should consider entering your buy trade, and your stop loss should be below the third candle, or you could set it below the first candle, or you could set it below the third candle, whichever one suits you. But below the third candle is actually better. But if you want to give price enough room to breathe, you could just set it below the first candle right here, and you could target a 1:1 or a 1:2 for your take profits. I like to use the 1:2 fixed risk to reward ratio, so we just target the 1:2 risk to reward ratio in this case, and then we have our trade. So that is for the upside Tasuki Gap candlestick pattern. And let's look at the downside Tasuki Gap candlestick pattern. After the formation, first we should look at the overall market context. So quickly zoom out, and you can see that we have been bearish, and we just had this break of structure to the downside, and then we have this retracement back into this key level. There's a key level here. Okay, I'm just gonna move the opacity. Okay, so we have a key level right here, and price is expected to react from this key level. Stretch this. Okay, so this is a major key level, and we are looking for price to react from this resistance level right here. And price gave us a very good reaction. We have this first bearish candle, and then we had the gap, And then we have the confirmation candle or the retracement candle, which is this green candle failing to close the gap entirely. You just closed it partially. And then we have the next couple of candles closing below the second candle, confirming the bearish trend, and we should be looking to enter selling or short trade opportunities like this one. So your stop loss should be above the third candle in this case scenario, which is this bullish candle failing to close the gap. And or if you are not aggressive, or if you like to give your stop loss enough room to breathe, you could just set it above the first candle right there. And then you can set your take profits at significant support levels, or you can set your take profits at a fixed risk reward ratio like a 1:1 or a 1:2. So I like the 1:2, and this is it. This is it in and out. That is how I would have taken opportunity to trade with the Tasuki Gap candlestick pattern. There's an example here, but it didn't exactly fulfill the criteria. You can see the first candle, we are bearish, and we are looking to break this structure right here. And we have the first candle, which is the bearish candle, this one here. I'll have the gap right here, and we have the retracement candle partially filling the gap, and we should be looking for the next two candles, or the next candle, to close below the third candle right here. But none of them did that, and that shows that we shouldn't be taking this trade. So this is the importance of the confirmation, waiting for the fourth or the fifth candle to close below your second candle, and that should give you a good confirmation to enter short trades. In this case scenario, we didn't have that confirmation, so we won't be taking this trade. So this just serves as the importance for confirmation in your trades. Just like we had here, after our retracement, we had the next two candles closing below the second candle, which is the candle that created the gap. And after that, we are looking to now short the market, or enter short positions. So in conclusion, you should always confirm your trades, always check the general market context, and trade in line with the trend. Do not trade the Tasuki Gap candlestick pattern in isolation. Always combine it with your technical indicators and with price action. Alright traders, you've come to the end of the video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.